Hello and welcome again to Cashline Trading. So, without being too long on the intro, on previous episode we talked about vibration, energy, frequency, and vibration, and how this affects our daily life, and also how we can relate this into trading. And we talked about you're either vibrating in either lower vibration, which leads to failure, or high vibration that leads to success. And this video is on this channel. You guys go check it out. It's a very important video. As promised, I want us to talk about market outlook on XAUUSD, that is gold. So, what has been happening here? I'd like to actually start by higher time frames like weekly profile first of all, to completely grasp the idea of what's going on here. Okay, so take a look here. Earlier this year, market January we jumped to the highest of all time, 5,500, around there. Then we started dropping down, dropping down, dropping down. So when we were dropping down over here, our drone liquidity was definitely weekly swing low. So if I mark them up, like this is how to read price action, guys. I'm teaching you guys how exactly I usually read price action, because the first most important question that any trader should ask themselves is that where is price coming from? Where price is coming from, definitely we're looking for liquidity. So if as price attack liquidity, if not, then know that you're the next liquidity to be attacked. So always, for you to answer this question, like where is price coming from and where is price going to, for me, is very, very important. So let's take a look at what was happening here. I'm just gonna mark this PD raise so that you guys can see how I usually do my analysis and get ready, to grasp what the market is happening on, like what the market is doing. So this is on a weekly time frame. So on January, I'm on weekly time frame. So on January, we hit all-time highs this year. You see, it was this aggressive push it upside. Then we started pushing lower, and we're apparently in the second half of the year. The first half of the year, if you're smart enough, you can see what has just happened. This was January. All this is January. Then you have February, then March, then you have April, May, then now June. Finally, June has ended. Now when we finally began July, and I'm expecting the markets to switch. As you can see, on the first half of the year we've been dropping down, dropping down. So if you're dropping down, the first question is always, what is the drone liquidity? Where are we headed to? And actually, maybe I would love to go even further on monthly, just to fully grasp the idea of what's really happening here. As you guys can see, price was pushing lower, and from the look of it, we seem to be having some intentions of even price going lower. When I take a look at for example, this monthly time frame, yeah, definitely. So it's always very important to start your analysis. Yeah, so on monthly time frame, we can even get even a clearer picture. So as much as I'm kind of a little bit bullish, I wanted to look for ways for us to push this price higher on lower time frames. But on monthly time frame, you guys take a look what's happening here. You guess it right. We are going down based on what has happened here. Like this is now for for people who want to engage into swing trading. Because take a look, guys. We had a swing low here. This monthly swing low, very important time frame. What happened here? We displaced aggressively below it, and from the look of it, we might just end up creating a gap this month here. We might just push higher, maybe to somewhere here, then we create a gap. Once we confirm by creating a gap here, then ladies and gentlemen, get ready, because we are going down somewhere around here. We're going to actually my plan was around 3,300, around there. That was where I was seeing this price pushing towards. You see, because you see this inefficiency of last year, September, it hasn't been filled yet. So price always have to come back to them. So I'm really expecting gold to push towards 3,300, around somewhere there. And even for us to push down here, because we pretty much have something like another block there, for us to push here is going to be backed by geopolitical factors. Even this move pushing upward right now is backed by geopolitical factors. So we have two options. If we end up closing this gap this month, we end up disrespecting me, meaning that price, this will just liquidity grab, because now the next time we goes and close back, and then we move into time frames like weekly, we see things like fair value gaps or bullish ones on weekly time frame or maybe daily, then that shows that now we're interested in pushing higher. And this needs to be backed by, fundamental side of things. For example, I recently saw there's a possibility that the US dollar is gonna crash soon, because I read somewhere, I think US banks are also bagging on gold. They're reducing their reliance on dollar, I think something like that, and they also took some investments on gold. So this gives power to gold. This was this week, and this, those are some of the things that gave this this strength for the market to push higher. So fundamentals, of course, will always play massive role in these ones. And now, since we've been dropping, what was the draw on liquidity? We took some liquidity right there. We were supposed to take a look. How did price react in this after taking this liquidity? Because this week we took liquidity, both that weekly swing low and this weekly swing low, and the price immediately went and forced back in, meaning that it was interested in pushing higher. Unfortunately, as much as it was interested in pushing higher, we ended up creating something we call let's say a gap, fair value gap, right? This one right here. So we had two things going on. We had a market structure shift here to the downside, meaning that there was a possibility of us pushing low again to attack something below here, but already we are taking some liquid. So if you're buying here, yes, of course, but you are not supposed to be targeting this speed race up above here, not unless we fully completely go against this PRA. But the fact that we approach the consequent encroachment of this PRA weekly gap, for example, right there, we attacked it. Just take a look at that precision. Take a look at that precision, guys. You see it? We attacked it, and the first week attacking it, we respected it. The second week, we respected it. This always tells you something, that this market, this idea of this candles closing back in, meaning that this one, this one did not displace above this one. This one never displaced above this one. And this one never displaced above this one. They all closed back in. This shows that this market is weak, because displacement is what gives us strength. So this was saying that, so if you're at the bottom over here, you are now looking for ways to exit as soon as possible, or put your stop loss to break even. Because as you can see, after having these signs, now on lower time frames, you'll see that now we started pushing lower. Now this is on weekly time frame. I want us to take a look at what was happening here. So we ended up taking this, swing low, weekly swing low right here, and this was our last move. This was the last low that was attacked here. So if you take a closer look over here, we do not have any gap. We don't have any bearish gap specifically supporting, cells here, apart from the one we have above here. This one we have above here is yet unfilled. So in terms of drawn liquidity, we have two things here. There's a drawn liquidity over here. There's a drawn liquidity over here. There's a drawn liquidity over here. This one is the the highest in this range, but not really the highest. The highest one would definitely be this one, but let us not focus on that one right now, because it will depend on how we react over here. How price react over here will depend on whether we're going to reach up here or not. So take a closer look. We took this liquidity down here. After taking this liquidity, what did price do? We closed back in here, closed back in. Then the next candle closed back in, meaning that this was already showing signs that market want to push higher. But at the end of the day, it created another liquidity exactly that you see here. So there was a lot of manipulation, to be honest with you guys here. There was a lot of manipulations right here. It created some other one, like liquidity right here, which price also ended up coming after again down here. Then we go back in. Then now this last week, we also took liquid. Like, it's been a lot of manipulation, but this has been as a result of, I remember US and Iran were playing some games, because a little bit US, Iran is attacking ships at the Strait of Hormuz. The next minute, US, and Iran having meetings, was it Switzerland or where? The next minute we see Hezbollah and Israel attacking each other again. So this is the reason for this ones, like this movement here. It was pure manipulation, pure chaos. And this, every single trader has gone through it. Even your favorite gurus, go and look, ask them, they will tell you it was crazy. Because we might just wake up today and hear news like Hezbollah or US or Israel attacked each other. Then Iran responds by saying that now, since Israel has engaged Hezbollah, in these attacks, we are no longer going to have a conversation. That confuses investors, because investors who are now, for example, depending on gold, they're now confused. And you see, gold is competing against the US dollar. Investors want to invest against inside the dollar. They're also confused. So whatever is happening to dollar, because this gold versus dollar is going to affect, is going to affect gold. Whatever is happening to the dollar. So whatever is happening to the dollar will always determine with what the presidency of the United States is doing, or their situation in terms of relationship with other countries, because investors are always wanting to invest in a situation whereby they're at peace, that there's no war going on, and their assets are safe. So let's take a look. We took some liquid right there. So some people are thinking like, okay, since you closed back in, maybe you move into lower time frames. You see, if we look for something like maybe daily fair value gaps right here, which unfortunately was never formed. So I mean that if you're smart enough, you never engage these 2 weeks, because there was nothing. Not unless we had some bullish daily fair value gaps, which I did not see. Let's take a look. The one we had here was 15th June. Let's see which week does this fall under. Yeah, this was 22nd June. So 22nd June, yeah, after we took liquidity here, this closed back in. So on 15th June, yeah, definitely. Let's see what happened here. This was pure manipulation. So if at all we had some bullish gaps right here, oh come on, I need the daily time frame. So if at all we had some bullish gaps here, especially supported by market structure shift, for example, yes, we did have some here. We did have a gap here, but unfortunately there was no market structure shift. So what would have happened here if we were to buy? We were waiting for price to displace above this swing high here. So if we displaced above the swing high, then we have this gap, then definitely, guys, we were supposed to be going higher. But unfortunately, we come and attack liquidity over here, but price does close back in. The moment it closes back in, it creates another liquidity inside it and comes back and takes that liquidity, then drops down. You see how it has been manipulation inside manipulation inside manipulation. The same thing it did over here. The same thing it did over here. We already taken liquidity over here, created some liquidity again, came back and attacked that liquidity. Right now, we don't know if it's still going to come back for this liquidity again. But based on price action, it's been very, very chaotic, because if you take a look at, for example, here, they had a displacement here, creating a gap. This showed that price was very bearish. When this day, for example, this Friday, 26th June, we pushed higher, we only filled that gap. We had another gap up above. Then we closed back in, showing that price was interested in pushing lower. Yes, we dropped. We came and took liquidity over here again. You see how that it is manipulation inside manipulation inside manipulation. It's not giving us signs, like real signs to push higher. Then now all of a sudden, when after coming up here, this was on drawn liquidity again. Now when we're coming to take this liquidity, or maybe filling this gap, then we expect first to go lower. What does it do? It pushes above. So this it's just crazy how these things behaves. So once it pushes above, we have a drawn liquidity. We still have some swing high right here. We have some inefficiency that is left unbalanced here. So this market is likely to just consolidate here more, but I'd expect maybe Monday for price to just create, displace above and create a little gap over here. If we end up creating a gap a little over here, I won't call this break. I don't really trade breakout structures in real sense, because to me they're so weak. I would like to see serious displacement with a gap. This is crazy. This is not what I'd like to see. I'd like to see some serious. Yes, we do have a gap here, but I'd like to see some serious displacement, creating gaps. So this is what has been happening. And from what I'm saying, if I'm being honest with you guys, I don't like this price action. I don't like it at all. It's not looking good for me. It's not looking good for me at all. Because we're now in a range. Because even if I try to to grade this dealing range, it's still not making sense to me. It's still not making sense to me on how price is behaving here. Let me just try and do something just a little. This range, this is the 0.5 of this dealing range. Since we displaced above it, There's a possibility, just as I'm telling you guys, there's a possibility we end up creating some gap here coming Monday. Right now the market is closed, it is Saturday. So when you create a gap here, to me that is going to be weak price action, because market might just want to come back again and tap maybe another block once created here. Yes, another block here before we push higher. So if I am to engage this, sorry, I would look for longs right there, put my stop loss right there, and definitely target these highs, which is around 1 to 1 hour. So I don't this, like for swing trading, I don't like this. This is, like, this is not what I trade, to be honest with you guys. So it's just crazy. The markets have been crazy, to be honest with you, and it requires a lot of discipline. And if you can't trade it, walk away. This week itself, or maybe let's say in the past few months, my strategy has been like no entry, no entry. And sometimes, I get bored and I take some entries, I end up losing, and I lose them because they're low probability trades. And that is just out of being bored. Now you wanna do something because this market have been playing games long enough. So on the other hand, we can see the order flow on hourly time frame, which is also very important. As after we took some liquidity right here, as you can see, we now have market structure shift, price only coming back to test that order block again. You see right there. Then after that, we start pushing higher, and again, this was a breaker. Price comes back to it again, testing this order block. We push higher. We pushed higher over here again. So right here, don't be astonished. Over here we had this break again, so price really never came to test it well, but price might just want to come back and fill this one before we push high again. And the same thing over here, so we might just push lower a little bit to test it over there, then we push higher. So in real sense, the market order flow from this in this scenario is very bullish, not unless we end up displacing below this swing low with a bearish gap or bearish PDRS. Then our first question would be, what is the drawn liquidity? Drawn liquidity would be this inefficiency being filled, or maybe these ones. Those are going to be the drawn liquidity. But so far, it's a very tricky situation. This is where you have to be very careful, because I see possibility of market wanting to come back here on this daily bearish gap. You see up there before because the deal between Iran and US is that it is a 60 days deal, meaning that these people haven't even resolved their issues. They're waiting for 60 days, then they say we are going to attack each other. And I don't see sign of peace with these people, to be honest. I don't see peace happening anytime soon. And whenever they are at war, of course, expect gold to be, because now gold doesn't give returns in terms of interest rates as compared to the US dollar. US dollar, when you invest in the US, of course you're gonna get returns because it has interest rates, but gold does not have interest rates. So you as an investor, or assume you're an investor, where would you take your money to? Because interest rate is like, you want returns. Gold is just a safe haven. It doesn't really give interest rate. So a lot of people will definitely go for the US dollar, and when they do that, that is bad news for gold. And this is why this thing has been happening, and Trump is literally doing that. He wants to keep the investors, he wants to keep the dollar rising. You see that? But it has also its consequences in the market. So this is being it. This is like my current market outlook. I really can't say anything about it right now. It's crazy. If you're a beginner, maybe just stay out for a little bit. Just wait until we see if we can move in any of this range. If you have some displacement, some clear market signs before we engage this again. But right now, it's crazy, because even if you, for experienced people, for experienced traders, of course, if you understand, maybe ICT concept, or you understand how you can be able to day trade in here, yes, but it's gonna be still low probability. So that being said, I think I'm done on this one. I'll see you guys on the next one.